Today I want to cover some price action on 2 days, yesterday and day before yesterday. Today is the 5th of June 2025, and we'll cover some trading opportunities both on GU and EU for London and New York session for the 3rd of June and the 4th of June. But before we jump on that, I just want to talk about a little bit on what our approach to trading is. Basically, it is trend continuation, liquidation, and mitigation. I like to call it the TCLM. And the idea basically is that we're trying to catch the wick of a 15-minute candle based on the behavior of the previous 15-minute candle. So if you look at the diagram again, and I'm going to keep talking about this till it is part of your subconscious, that a 15-minute strong momentum candle will probably in higher percentage have a follow-up of a 15-minute candle in the same direction. And the reason for that is that there is an entire trend on 1 minute that is building up that 15-minute candle. And while that 15-minute candle is being created, within the 1 minute you are seeing sweep zones being developed, you're seeing supply and demand zones being developed, you are seeing the low wick being developed and closed. And as soon as the new candle starts forming, it creates the initial wick, which then reacts on certain supply zones and certain demand zones. And our job as traders is to capitalize on this. We want to figure out where the reaction most likely is going to continue in the direction of that trend, and how do we get involved in that trading opportunities, in that entry. And based on this, I'm going to continue looking at some of the trading opportunities we got in the last 2 days, both in London, EU, and GU sessions. Okay, so let's get to it. Let me delete that for you guys. All right. So firstly, I want to share, this is my 15-minute chart window, and this is exactly how I keep it when I'm trading live as well. So what do I normally see? As soon as London opens, I'm looking for a strong 15-minute bearish candle because the trend is bearish right now. 15-minute candle in either direction to then anticipate the continuation of that trend in that same direction of the previous 15-minute candle, right? So as soon as this bearish candle gets formed, I put a box around it. This entire box is basically where I am laser focused, and this is where I want to take my entries. The idea of this entire trading strategy is that you want to be pro internal structure, because that is the immediate trend that you want to capitalize on riding, getting an entry on that wick and riding that entire trend for the next 15 minutes. And if you get the entry at the most opportune time, at the best possible entry for the day, then you can potentially ride that entire trend for that entire 2-hour sessions, and you can end up with 15-hour or 20-hour. Again, that is if you have good trade management in place, right? I wouldn't blindly just hope for the stars, but we shoot for a modest 2 to 3 hours with a higher probability of winning trades in our favor. So coming back to this entry, I have that block made. I am looking at the trend on the 1 minute. I am looking for liquidation. This is where the liquidation happens. This is a high that broke this low and then got swept into my zone. I would start placing an entry at the breakout of this candle first. If this did not happen, the next is an inside bar. I'll wait for the next candle close, and then I mean this is a confirmation, right, that it mitigated and it had a strong bearish close. You place an entry at the breakout of this candle, placing the stop loss safely above high on the previous zone, and it was a nice trade all the way down to 3.79 hour, but we'll close it 2 and we'll call it 3 hour as well. So that's your 2 hour and a possible 3 hour, right? Okay, so let's move on. That's one trade on third on GU. Let's move on and see this. So I keep normally monitoring my trading windows, my trading sessions are strictly London and New York, right? But if I see a strong momentum candle coming towards the end of the session, right, I want to ride that momentum of that candle into the next candle, and this is exactly what happens here. So I am towards the end of my London session. Where are we? Right there. I am towards the end of my London session, and towards the London session, this is what I observe here. I observed that this wick got taken out, it got swept, so the strong liquidity got swept and it had a massive bullish close. Now, I am definitely looking at opportunities to ride this. Now, it could ride halfway through, it could immediately turn on me, or it could ride to the moon. But these are the setups that I would be interested in, because within this candle, you have this 1 minute trend to the upside, all right? So let's look at this. This is the 1 minute candle moved up here, coming back. I see strong liquidity taken, but I wanted it to mitigate the zone as well. So I'm waiting for my opportunities. My opportunities or entries come in how? By the breakout of that liquidation candle. I already got the entry over here. So this liquidity is something that I'm not interested in anymore. I'm looking for fresh liquidity, which does not give me an entry before I hit the zone. So in this case, I got another liquidation with this inside bar. So as soon as this closed, it took the high and then the low got taken immediately. So everything happened within this one candle, one minute candle. If you switch to 15 seconds, you will very clearly see it took the high and then took the low, and then the low got taken out. Once the low got taken out, you place an entry, stop buy order at the breakout of this candle, and then your stop loss safely below the zone. And this gave me an easy 2 hour. Let's move on. This is New York session now for the 3rd of June. And what do we have here? Look at this. A classical example, right? So I'm not cherry picking trades. This is a loss a loss or a break even in our books. No, a loss because it took the high. So a nice bearish strong candle breaking the structure to the downside. We create a box around it, and all I'm looking for is 100% trend continuation of that bearish momentum, right? So you have this 1 minute trend coming in, and while the 1 minute is developing, the next candle opens up and it creates a lovely wick. Now, obviously, the first time the wick is being created, this is the strong high that broke this low and then got swept. I placed my entry at the breakout of this candle. Did not happen. A new candle formed, breaking to the upside of the previous candle, and I placed a stop order entry onto the downside at the breakout of this candle, and then I put my stop loss high of the zone. Pretty safe over there. And in this case, what happened was price tagged us in and immediately took us out. And I will tell you this, if you give me 100 trades, I will take this entry 100 times, because I know my edge 60% to 70%, this setup will give me a win. And so I'm not going to hesitate if a single loss like this happens on me, because I know on a large sample size, 100 trades, I'll take those in, 70% of the time I'll win. So we'll chalk that as negative 1 hour. All right, fantastic. Let's move on. No more trading opportunities here. I can show you potentially if there was anything in this candle, because you can argue that this is a nice candle over here, but there was no liquidation, right? So the candle closed over here, the new candle started over here. It did create the wick at the initially. The start of the candle was with the wick creation, but as the wick was being created, there was no liquidity taken anywhere, right? This is all nice steady move upwards, steady move downwards, and then a steady move upwards. There's no liquidity. So if there's no liquidity, I'm not interested in a trade, and that's why I did not take that trade. On the 3rd, let's move on to the 4th on GU. All right, what do we see here? We have a break-even trade. Let me just write that first down. Break-even. All right. Again, I would take this trade all day long. We have we have the start of London Open. We have a very strong bullish candle to the upside. We have a nice demand zone created, which swept the low of the previous one. So it's actually a sweep zone. And as the price is moving up, it's creating a 10, and the new candle formation, the price is moving down. We take the strong liquidity. Why is this a strong liquidity? This low took this high and then it got swept. I did not get any further entries until I mitigated my zone, and then I placed a stop order at the breakout of this last 1 minute bearish candle close. It tagged me in pretty strong, came back in, and then it took me out for a break even at 1 hour. The only negative confluence on this is I do not like to see my zones broken. at all, right? So by breaking the zone, what it means is that this low is not the strong low, and I don't want to be trading from weak lows, right? Why I still placed an entry over here is that in my mind I assumed that this took liquidity because it wasn't too strong of a break and it did not close below. So I'm assuming that this was liquidity grab with a nice strong wick, and it's going to continue upwards. And once it broke me in at this point in time, I was 100% confident it's going to go in my direction, and it would 70% of the time if I were to take this trade 100 times. So I'm happy with this trade. It was a break even, perfect textbook entry, no problem. We move on. I will give you some bonus entries over here, sort of an example of what entries could do for us. So bullish candle, we have the nice trend moving upwards. This is pre-London, of course, and I would let's study this. So this is the zone, right? This entire zone, it did mitigate that zone. This is the low that needs to be liquidated. This is the low that needs to break this high to get liquidation. This low did not achieve anything, so for me this is not a strong liquidation. This low, on the other hand, broke this high and then it got swept, but after it got swept, it gave me a bunch of entries before mitigating the zone. So this liquidation I'm not counting. This is a weak liquidation because it did break fractal structure. So high, low, and this high got broken by this wick and then this got swept. It is weak structure, weak liquidation, not the strong liquidation. I did not take this trade. You could take this trade if you waited for the reaction candle. Now with this sort of a reaction, I would place an entry maybe at the top of this breakout entry at the top of this candle, and my stop loss right below this, and ride that trend. But no strong liquidation, no entry for me. I will give you another example just as we learned this model and we learned the entries. Price is moving to the upside. Great, price came down. This low needs to be broken because it did break this high, but this never got swept, so I'm not interested. The price is very correctively moving on upwards, so there is no opportunity for us there. And which is why I don't get scared, because I have very good mechanical rule-based entry models. And I don't end up being in a FOMO, because with this strategy you will have ample opportunities day in and day out. One miss here and there amount to nothing. And here are the opportunities that come in New York, right? So pre-New York, a nice solid bearish candle. Once you have that bearish candle, what am I doing? I'm putting a box around the two candles, the previous one and the post one, and I'm laser focused inside this box to see if my entry model comes up. This is the high that broke this low. I want this high to be swept. It did get swept, and it had a nice close bearish. I placed my entry as a breakout entry at the breakout of this candle, placing my stop loss conveniently, safely high above that zone, and then I wait, right? And you have an easy 2R, and potentially before it hits break even 2.5. Never really hit the 3R on this one. Now you could ask me that this is not a valid zone. This is something that you will not trade from, whatever have you, right? Why do I call this a zone? Couple of things. First of all, see what is it reacting to. It is reacting to this zone over here, right? So this is a clear reaction zone. It had a reaction, came back in, and this interaction is the one that caused this demand zone to flip into a supply zone. So that's number one thing, right? What is it reacting to? Now, for me, the interaction, the buy to sell wicks are also areas of interest. I wouldn't call them very strong, high probability. Those are my solid zones, right? Those are my big bearish or bullish candles that close strongly and then have sharp movement away from it with maybe some fair value gaps. Those are my zones that I'm looking at. But I'm also interested in these type of zones. The reason being that these buy to sell wicks are order blocks on your 15-second time frames. And because our entries and the way we trade, the whole strategy is so tight that you don't want to skip those buy to sell ranges, because they hold value on 15-second time frame, and you will get on 1 minute for that short scalping duration that we are looking at, you will get strong reactions. And this is case in point to that strong reaction where you did just from this region had a nice 2-hour trade. Okay, let's move on. So that was pre-London. Let's move on to the next solid candle that I was interested in New York. So after that, we had a very strong bullish candle, to the upside, breaking all of the structure on this side. It was a news, of course, right? So this is a giant push, maybe a news event. I mark the box around the previous candle and the post candle, and now I'm looking at my entries. This one had a liquidation, right? So if I were to point this out at this point in time, this had a strong liquidation. The reason I did not take this give me 1 second, template, okay. So the reason I did not take this liquidation entry is because it's not reacting from anywhere, right? It's just the body of the candle. There is no buy to sell wicks, there's no zone. So first of all, I would not take an entry over here because it's not reacting to anything, any solid zone that I would consider a zone on this candle. Secondly, this liquidation is no longer good for me because it gave me an entry before it hits a mitigation zone. Now, granted, the mitigation or the proper zone would be down here, but if I get an entry before I reach my zone, then that liquidation is useless to me. I don't count that anymore. This for me is gone. So now what am I left with? And this is my failed reaction. This is my third entry that I typically use. So there are 3 entries that I use. Entry on the liquidation, entry on the reaction after the liquidation happens to get a little bit more confirmation, and the reaction would be, for example, this zone, right? So if I'm looking for a sell and I get a nice liquidation, price is moving upwards, and then I would put a sell stop order at the breakout of this. This would be the liquidation candle entry. But if I'm waiting for a little bit more reaction, then I wait for the bearish candle to come in strongly, closing below that. That's the reaction candle that I want to take downwards, right? So those are 2 entries. This, what I'm looking at, is called failed reaction. So what happens is price is trickling down, right? And then it goes upwards. As it is going upwards, there's a clear order block on the 1 minute time frame. Nobody's going to argue. This is what it is. Now, where is it going to and where is it reacting from? So now the price went upward and it reacted very strongly from this zone here. You could classify the entire body as a supply zone here, but in such tight price action, I classify the wicks and the body, the part of the body that has not been mitigated, right? So I saw the reaction first. I looked to the left. Where is it reacting from? Fine. It took the high of this and closed bearish and then further moved down. So this is a sweep zone. The top side, the wick on seconds time frame has what? Has order block, right? So for sure, I could call it like this, but the part of the body also has trend within it, an order block or a supply zone or a demand zone within it that the price could react from. So to make it easy, I just mark the entire zone which has not been mitigated of this candle. Within the zone, there is obviously an origin. There is already an order block in the wick. That is where everywhere in this region the price could react from. So after price reacted, my thought pattern for an entry is that this supply, if it is strong, right, it should create a new lower low, right? Which means that this top, this high should not get broken if a new lower low is created. But when I saw price coming down and then it giving me a strong reaction like this, it's not convincing me that a new lower low is going to get created. On top of the fact that the previous candle is such a bullish, strong momentum candle. So if I am in an uptrend, why am I looking for a sell? I'm looking for excuses to buy. If I'm in an uptrend, this is the low that has been formed. Now I'm looking for my entry model. This liquidation does not happen because price did not react from anything. It's just a solid candle. Then I'm waiting for a battle between supply and demand, right? So what happens? Price moves up. There is an unmitigated supply over here. Price reacts from it, goes back into this demand zone, a complete order blow, and reacts from there. Once it reacts from there, I am pretty much convinced with the back of this giant momentum candle, giant bullish candle, giant trend to the upwards. If this high breaks, then it's going to the top side, and that's where I place my stop order at the breakout of this failed reaction. Failed reaction because this supply was not able to give the reaction that we wanted, so it failed, and then we got in triggered in with a giant push of this 1 minute bullish candle, and off we went to the moon, right? So let's call this a win in our favor for a 2R win, yeah? And this potentially gives us a 3R as well. without the break even. So that is GU for us, and let's tally the scores for GU. 1, 2. So that's 2R. That's 3, 4. Let's move backwards to here. That's a break even. So we're still sitting in a 4. Let's go previous to here. That's -1. That's a 3. Let's go back here. What do we have? 3, 4, 5, and then 6, 7. So we have 7 hours in GU in 2 days. Not bad. So there you have it, guys. I'll be putting out the EU as part 2 of this series in a week's time. So watch out for that. And also my request, if you like the content, if you enjoyed or learned something new, please do like and subscribe, share within your community. It helps me and it keeps me motivated to bring out quality content on trading. Also do join my Discord. I have a lot of information already on there. I do put in daily markups for EU and GU, both London and New York sessions. So there's a lot of value that can be had in looking at past setups and to making sure that it is part of your subconscious. So there you have it, guys. You take care of y'all. See ya. Bye now.